Hey everybody, this is Jim at SP500chart.com. It's about 2:30 in the afternoon on Sunday, April 27th, 2014. We're going to take a look in our weekly review and see what took place on Friday, after I remind you that the website and this video are for educational purposes only. Nothing stated at the side or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's dig in. Starting out here on an hourly chart. And I have cleaned this chart up a good bit, and because it needed housekeeping. So some of our smaller little patterns that we've discovered on the 5 and 10 minute chart, they're gone, and really they don't need to be there anymore. You can see that I'm looking at an hour chart, and this has a tendency to make some lines kind of squiggle around a bit. So I've just corrected a couple of those. But basically what happened on Friday is we had some weakness that to my eye seems to possibly have taken the S&P well, obviously into negative territory. But if we're looking at one of this little really steeply rising channels, you remember, then we snapped a line here that was parallel to this top line based upon this low right here. We broke through that too. But I'm going to do something just a little different here. If we look on this chart, we can look back and see time and time again where the real trend was not incredibly steep, where the real trend revealed itself to be really something more along the lines of this line right here. So I'm still not in panic mode with the breaking of this line. As a matter of fact, I'm going to get rid of that line because we've got some other technical things that we're potentially coming up on that should give us some support. Most notably is this 1840 to 1850 area. And it should not come as a surprise that 1884 was once again resistance. But here's the way it works, I think, at least it's the way it seems to work, is that every time you come back up to a certain level and you try to break through it, the chances become a little better that you do. Sadly, every time you bounce off of it and you come back down to support, the chances are you may break down through support. So that seems kind of counterintuitive, because if the chances of getting over this line are greater, then I think the difference is while you are in the process of challenging that line, you feel there's a good chance we make that hurdle now. But when you get turned back, then you have to say, well, couldn't make the hurdle. So now as we come down potentially to some support areas, you feel like those areas are now at jeopardy because of one more failed attempt to get over a certain level. Sort of again like that Ninja Warrior warped wall. The guy makes a run. You know what the warped wall is? It's basically you have to run down and up this curved wall and grab the top ledge and pull yourself up. It's not easy. I think that wall is something like 14 feet tall. It's a booger. And here we are at the warped wall. We tried it, backed up. Tried it again, backed it. We grabbed the ledge here but fell off. Then we came back a little deeper, made another run, fell off. At what point in time does this start to look like the market can't get it done? Or at what point in time do you look at this and you say, certainly the shares that are available, if you will, at 1884 should dry up. So whoever's selling up here, at some point, when are they going to run out? At some point they will, if we keep coming up and testing it. At some point, people will stop selling here. But so far, for the past 2 months, the word has been, when you get to 1880s, sell. When you get to close to 1900, sell more. Then back up to 1884, sell. But once again, we are not really in any apparent danger at this level, because we still have almost all of the support that was behind us for the past week and a half. It's all still there. We just couldn't make this level again. So let's zoom in just a little bit. And here you see it. We were in this little channel right here, broke out over it. At one point we had our little small channel marked here. I'll mark that again. You could see that gave way. Then we went sideways for a bit, made 2 more attempts at it, couldn't do it. This really at that point became a little double top. This little double top has a target that is, well, it's about what we saw on Friday as a low. So we could bounce here, or we could come down to the 1840, 1850 again. If we do, and if we get a bounce here, and we come up to this, let's see if this breaks. But honest to goodness, we are where we have been once again. We've been in this area for, well, 1, 2, 3, 4, 5, 6, 7, 8, 9, for 9 weeks, 2 months in this range between 1840 and 1884, with the exception of 2 days or so, the week of the 31st of March, or excuse me, the week of April 1st. There is no week of the 31st, but the first week of April, and then again we were underneath that range for a little bit right around April 15th. Again, a few days either side of. So if we zoom in just a bit and we look at this, I'm going to get rid, again, I'm just going to clean this chart up a bit. Got a little resistance line up here, but you know, it's the same thing as 1884. We don't need that on the chart. What I would say is this: we may be forming a little very, very short-term bottom here, just from the general looks of what we saw take place on Friday. It looks like it's wanting to maybe bounce at 1860. Because we're not forming one of those steep declines and then we kind of inch up. Instead, we came down hard and then we started to just come down a little less hard. And as a matter of fact, you could even make the case, although I don't think it's a terribly strong case, you could make the case that we had one of those little, kind of the opposite of a typhoon flag, and here it is right there. This could be a little reversal pattern. So keep our fingers crossed. If you're a bull, maybe we're just going to see a little weakness for a day and a fraction, and then we firm back up. If we don't do that, then we've got 1840 to 1850 to catch us. Somebody asked me, not at sp500chart.com, but elsewhere, that don't you think the S&P is at a top? Well, it could be, but until we break through some of our important support levels, I think that's purely speculation, because we could have speculated back in May of 2013 that we were at a top. We could have made the same speculation in August of 2013. We could have made the same speculation in December of 2014. We could have made the same speculation, you get the pattern here, in January of 2014, yet we keep bumping up to a little bit higher high. So let's see if that pattern remains intact. As far as when do we have a sign that the party is over and we're entering significantly technically bear market territory, I don't think that would happen for sure until we're under 1600. Now that kind of stinks because that is about 16% lower than where we are right now. Is that right? 16%? That's 1860, about 260. I'm ballparking it, but it's significantly underneath where we are right now. But the first sign of a potential bear market turn, I believe, would be taking out this blue line right here that is our long-term support line, and it is currently at approximately 1738, 1733. It's currently, let's just call it the 1730s. Before we get there, we'd have to get through 1800. 1800 could also give us a bounce, but really this would be the first long-term line that goes all the way back to the beginning of this bull run. So you see there's that line right there. The original low, March 9th, a touch October of 2011, another touch in November of 2013, and we haven't been down to challenge this line since. At some point we will. But that would be the line where if we get underneath that, then I would start to say, okay guys, this does not look good. But even then, I don't think it's for sure until we set a low that really is, I would say, until we set a low that is significantly underneath our previous low. And that, again, is right at about that level, 1739, 1738, that I'm pointing to right here. So this is an important support line. This line right here could save us too. So that's why I'm saying, really, you don't say the wheels have come off for sure, I don't think, until we're under this red line right here, which is at about 1600. By the way, that is also a line that is drawn over our, got to go to a 9-day chart. That is this line right here too. You can see I'm highlighting it right there. That is a line that is drawn over the last two major market tops. So if we were to come back to 1600 at some point, the interpretation of that could be a back test. So that's why I think if we come to 1600, just getting there by itself doesn't mean that the wheels have come off. I think getting there, and that we have a confirmed top, but I think getting there certainly would give us pause, because that means we would have taken out some important support trend lines. So, going forward into the week, what am I looking for? Well, same old. Looking for support 1840 to 1850. If not there, then we do have other reasons to expect to be picked up. We've got our I keep having to move it as I zoom in and out. We've got this line right here that has been good on 1, 2, 3, 4 tests. Make that 5 tests almost. Not quite. Didn't quite come down to it in the middle of April, but got darn close. So again, we've got a number of support lines underneath us, and right now, as I see it, just one resistance line above us, and that's 1884. Get over that, then I think we get up into the mid-1900s. And it goes without saying, if we can't get over that, then that's not going to happen. I know that sounds kind of stupid, but if we do get over it, then I believe we're going to head up, and we're going to head up for a while. With another leg up, that we could see that move take place, and we could make that 1958 target by the latter part of May. So let's just keep our fingers crossed, see what we get going forward. And I'm going to show you one more quick thing. It's a chart that I showed you last weekend for the biotech index. That has been really weighing heavily on the market. So I want to show you that one more time. Okay, here's our biotech index. And if you just look at this chart right here, I think you have to say that's a pretty bullish looking chart. And here's why. Even though we're a little bit underneath this neckline, we have an inverted head and shoulders pattern. We have a potentially larger inverted head and shoulders pattern. And then if we zoom out a little more, we have a potentially even larger inverted head and shoulders pattern. But most importantly, when we put this in context of where these things are forming, you can see that there was a descending channel right here that lasted for the better part of 2 months after setting an all-time high of about 270 in this index. We broke out over that, gapped over it in fact, and then started to sell back down. So I would say as soon as the IBB, and again I'll clean this up, we don't follow this very often. I just think this is a very interesting chart. But I would say as soon as the IBB can make it over this line right here, then that should correspond with a nice move in the NASDAQ, and that should bleed over as well as a nice move in your S&P 500. So I'm keeping an eye on the biotechnology index fund. For one reason, I've got a lot of biotech stocks, so I'm definitely keeping an eye on this. You can see as we look at the NASDAQ that we have a long-term support line here. Again, this is that long-term line that goes all the way back to 2009, and that is we're not really even particularly close to breaking that line right now. We closed sadly down again by almost 2%. Well, about 1.75% at 4,066, but that line is currently at 3881 or 3880, let's call it, and rising. So the fact that this intermediate line is broken, well, we've had intermediate lines break before. One broke back here, it looked really ugly, and then we started to rally. So maybe we see a little sideways in the NASDAQ, or maybe we're finding bottom here. But all I'm saying is people have been feeling like, oh no, the NASDAQ is just falling off the face of the planet. No, it's not. It's having a corrective phase, much like what we saw in late 2012. But the jury will not be in on that until, I think, we break this little line right here. You can see it. There it is. As soon as the NASDAQ can get over about roughly 4,200, if it happens early this week, then again we may be looking at a little inverted head and shoulders pattern. I'm just going to keep my eye on this. This could have been a breakout. We may be coming back to test that breakout level at about 40.71, or we could even come down deeper and test this line right here at some point, making this something of a double bottom. Just have to keep an eye on this. This would probably be this is the closest thing I think that we look at a major index that looks like it could be in trouble. But when I look at the IBB and I realize how much a part of this decline has been in the biotechnology sector, I'm not panicking at these levels. So guys, to wrap it up with the S&P chart, again, I've been a broken record for all but 1, 2, 3, 4, 5 days, and that is we are in the middle. We're right around between 1884, 1840. Again, this is a little bit fuzzy where our support is down here, but here we are once again in this same area. So guys, thanks for watching. Take care and be careful out there. Don't turn a blind eye to this, because we're in an area of the chart where where things could get a little dicey. And tell you what, I think tomorrow I'm going to show you one more thing in tomorrow's video that could be coming a little bit later in the day. I'm going to be out of the office. I'm not sure what my schedule is tomorrow, but I will get a video up for you for sure. So guys, thanks again for watching. Take care.